Hey everybody, Marty Mazzara. Good afternoon, March 3rd. I'm going to keep this one really quick. 60-minute chart. The upper part of the channel there, I have made a little steeper today to catch today's natural level of resistance. We closed just below it. That steepens this channel a little bit. However, you see this line coming up from down here. What I do here is connect the three lows during the recent rally. Notice they ascend quite rapidly, and more so than the highs. That's actually a bearish signal, because what it does is it creates this upward sloping wedge pattern, which suggests that the strength to the upside is beginning to wane. So typically what would happen in good textbook technical fashion would be this means that we're going to start topping and then come rolling down and have a sell-off for a few days potentially. Plus, we're just a little bit overbought on a short-term basis. So this is one of those days where going forward over the next 2 or 3 or 4, we could see a sell-off that might test some of these lower support levels. Of course, it could go down a lot further. There's a lot going on in March that could really move markets. But beyond that, the momentum looks good. The breadth of the market looks good. We're seeing a change of leadership. Some of the stocks that were shunned earlier in the year, a lot of stocks that were shunned for quite some time, the last year or two, are showing some signs of life. Commodity stocks last few days have done very well. Financials have been in vogue this week. So, and I think that speaks to firming oil prices. And we've talked a little bit lately about the technicals in oil. Fundamentals still don't look great. There's just too much oil sloshing around in the world. However, demand has picked up. U.S. has cut production by about 25,000 barrels a day. There's talk of production cuts in other parts of the world. There's still just an incredible amount of oil that's been pulled out of the ground that is yet to be sold. So if we've seen the bottom, I don't think we're going to see a great deal of higher highs in oil going forward for a while, but a firmer price at a higher level than 26, I think it got that low, maybe even a little lower, is good for what's been worrying the world for quite some time now. Not so good for the consumer. I won't get on that rant, but low oil prices I like for a lot of reasons. So folks, it'll be interesting to see where we go from here. Like I said, there's some upside momentum, although it does seem to be waning a bit. Tomorrow's a jobs number. If it's a really good number for the market, now you'd have to tell me whether it's really good, if it's higher than expected or lower than expected, because that whole argument about the Fed comes into play. Inflation data is heating up. I think it's going to continue to heat up. And so I think the Fed does become more of a factor for the market going forward. If we can continue to see a pickup in businesses expanding or spending money on productivity, because we need productivity gains badly. Today's productivity number was negative, but it wasn't as negative as many thought it was going to be. That would give I think the market some confidence that that maybe better things are to come in terms of corporate profitability against a tighter labor market, higher wages, and all that comes with that. So folks, I promise to be short. Let me just stop there, because there's going to be a lot to talk about between now and certainly this weekend. I'll have hopefully an interesting summary for you, and then next week we've got the ECB, we've got China's parliamentary meeting, we've got the Fed meeting coming up. Just a whole bunch to look at that might move the market on a near-term basis. Of course, having said all that, you and I are just long-term investors, and this is just me helping you put the short-term into perspective. Have a great day. Thanks for watching and listening. Talk to you soon. Bye.